Current market pricing for Datavault AI Inc., ticker symbol DVLT, stands at $1.66 per share as of this very moment, reflecting a significant intraday decline of roughly 13.8%. The market is currently seeing a bout of volatility that has pushed the stock down from its previous close, creating a tense atmosphere for day traders and long-term holders alike. While the broader Nasdaq Composite attempts to find its footing, this specific equity is experiencing a sharp contraction in valuation during today's session, with volume spiking as sellers dominate the order book. This immediate price action sets the stage for a critical examination of what is actually happening beneath the surface of this microcap entity. Most investors looking at a chart like this, a steep double-digit drop in a single trading session, might immediately dismiss the company as just another volatile small-cap casualty in the high-risk technology sector. The expectation here is simple and pervasive. This is likely a pump-and-dump scheme or a failing enterprise riding the coattails of the artificial intelligence trend without any substantive product to back it up. That is the easy narrative. That is what the charts suggest to the uninitiated eye. However, the reality of Datavault AI Inc. is far more complex and fundamentally disconnected from this surface-level bearish sentiment. The company is not merely a shell for hype, it is a holder of dense, enforceable intellectual property in the sector of real-world asset tokenization and data monetization, a sector that is only just beginning to be understood by the wider market. While the expectation is that this is a fleeting meme stock, the reality is that DVLT holds patents that could essentially act as toll booths for the digitization of physical assets in the coming years. This disconnect between the panicked selling we are seeing today and the structural value of the company's patent portfolio creates a massive arbitrage of information that we need to dissect piece by piece. To understand why this stock is moving the way it is, we have to look away from the standard comparisons. When you look at Tesla stock or Nvidia stock, you are seeing companies with trillion-dollar market caps that move based on global macroeconomic flows and massive institutional rebalancing. Datavault does not function with that same liquidity or logic. It is a smaller, more nimble, and significantly more volatile instrument. The drop to $1.66 today is likely driven by a mix of profit-taking after recent run-ups and a general risk-off sentiment in the speculative corners of the market. But if we look at the volume, we see that it is not just retail panic, there is a rotation occurring. The company recently announced updated revenue guidance for 2025, projecting between $30 and $60 million, a massive leap from previous figures. This kind of growth projection usually sends a stock soaring, so the current red candle suggests a sell the news reaction or perhaps skepticism about execution risk. This is where the opportunity for the astute observer lies, in the gap between the aggressive growth targets and the market's current refusal to price them in. Let's talk about the business itself, because this is where the smart friend over coffee explanation is vital. Most people think of data as just abstract numbers in a cloud. Datavault AI approaches it differently. They are focused on the intersection of data and actual physical value. They use a proprietary technology involving acoustic anchors and other patented methods to create a unique, immutable link between a physical object, like a piece of real estate, a luxury watch, or a shipping container, and its digital twin on a blockchain. This is often called real-world asset or RWA tokenization. The idea is to allow people to trade fractions of high-value physical items just as easily as they trade Apple stock on their phones. The company claims to have the dominant intellectual property rights for this specific type of data anchoring. If that claim holds up in court and in the market, anyone else trying to build a similar system might have to pay them licensing fees. That is a powerful position to be in, but it is also a risky one because it relies on legal enforcement and widespread adoption, neither of which is guaranteed. The trading environment for DVLT is accessible through almost any major portal. Whether you use a standard individual brokerage account or you are active on platforms like Fidelity, where you might also be managing your Fidelity ETFs and Fidelity mutual funds, this stock is available. It does not require a specialized account. You can find it on the Robinhood app, right alongside your Robinhood crypto holdings and Robinhood fractional shares. It is available via SoFi Invest, where many users balance their SoFi stocks with their SoFi robo-advisor portfolios. Even more sophisticated traders using interactive brokers for their low fees and advanced interactive brokers trading platform can access DVLT. The widespread availability means liquidity is not the issue. The issue is the sheer lack of awareness among the general investing public about what this company actually does. Most people see AI in the name and assume it's a ChatGPT competitor, which is a fundamental misunderstanding of their business model. We must address the elephant in the room, the sheer volatility. A 13% drop in a single trading day would be catastrophic for a blue-chip stock, but for a company of this size, it's a Tuesday. This requires a specific kind of temperament. If you are the type of person who uses Schwab intelligent portfolios to automate your risk away, looking at a chart like DVLT's might induce nausea. This is not a set-it-and-forget-it play. This is an active, living thesis that requires constant monitoring. You have to be willing to engage with the news flow. For instance, the company recently mentioned they're in dozens of contract negotiations worldwide. If even one of those converts into a binding high-revenue deal, the price of $1.66 could look absurdly cheap in hindsight. Conversely, if those negotiations stall, the stock could drift lower into penny stock territory. This binary outcome is what creates the tension we discussed earlier. The expectation is failure. The reality could be a massive licensing empire. Now, I want to pause for a second and ask you something directly. Comment below how many shares of Datavault AI you currently hold, or if you are waiting for a specific price point to enter. Are you in at these levels, or are you waiting for it to drop below $1.50? Let's get a discussion going in the comment section, because the sentiment there is often a better indicator of retail conviction than the charts themselves. Continuing with the analysis, we need to look at the sector momentum. The broader AI sector is currently undergoing a separation of the wheat from the chaff. In the early days, anything with AI in the name went up. Now the market is demanding revenue. Datavault's projection of $30 to $60 million for 2025 is their answer to that demand. They are effectively saying, we are not just a concept, we are a revenue-generating business. This shift from concept to revenue is the most dangerous and rewarding phase for a small-cap stock. It is the valley of death where they must execute or die. The fact that they're licensing patents for acoustic anchors, using sound waves to verify location and identity, sounds like science fiction, but it is a very real technology with applications in security, logistics, and supply chain management. Imagine a pharmaceutical shipment that needs to be tracked not just by GPS, but by a verified, unhackable data anchor that proves it hasn't been tampered with. That is the kind of problem Datavault is trying to solve. The involvement of retail investors is massive here. Unlike institution-heavy stocks where pension funds move the price, DVLT is sensitive to the mood of the individual investor. This is where the tools of online investing come into play. People engaging in self-investing are the ones driving the volume here. They are reading the press releases, they are checking the investing sites, and they are making decisions based on their own research. This democratization of capital is a double-edged sword. It means the stock can overshoot to the upside on hype, but it can also crash hard when boredom sets in. The current price action suggests that we are in a boredom or fear phase, where the initial excitement has worn off, and the hard work of building the business is dragging on the share price. But for a value-oriented investor who understands the tech, this is often the time to start paying attention. Let's look at the competition. There isn't a direct one-to-one competitor for what they do with acoustic anchoring. There are plenty of blockchain companies and plenty of AI companies, but the fusion of the two for physical asset verification is a niche. This moat is protected by their patents. In the world of intellectual property, a patent is the ultimate weapon. It allows a small company to punch well above its weight class. If a major logistics company or a tech giant decides they need this technology, they have two choices: invent around the patent, which is hard and expensive, or license it from Datavault. This potential for a buyout or a massive licensing deal is the call option embedded in the stock price. You aren't just buying a stream of cash flows, you are buying a ticket to a potential strategic acquisition or a licensing windfall. However, we must remain grounded. The risks are substantial. The company is burning cash to grow. They need to scale their sales team and their technology infrastructure. If the revenue does not materialize in 2025 as promised,